Singapore could become the first Asian country to provide gold vaulting services for foreign central banks and sovereign entities. It's part of proposed measures by Singapore Central Bank and the Bullion Market Association to boost status as a gold trading hub. It could also create job opportunities in vaulting logistics and security services. Nasyrah Rohim takes a closer look.
Singapore wants to be a trusted place for this safe haven asset, and its central bank has unveiled plans to build a stronger gold ecosystem. That's as interest in storing and trading the precious metal here grows. Here's a breakdown of the 4 new areas. Singapore wants to broaden its range of gold-related capital market products, meaning more investment options like funds and ETFs to make trading easier and prices clearer. Then it's also setting stronger global standards for storing and transporting gold safely. A new system will support secure, large-scale trades done privately between buyers and sellers. And Singapore may expand its vault services to store gold for foreign central banks and sovereign entities to meet growing demand. The Monetary Authority of Singapore will study what well-established gold trading hubs like London and Switzerland have done to build capabilities. One market watcher notes that Singapore will be an ideal place for countries to store their gold.
We are neutral, but we are a logistics hub, so you can anytime bring your gold in and bring it out, no problem. And of course, we are stable politically. But the only thing is that, unlike London and New York, the gold market there is very liquid. And also you can actually sell and buy easily. Singapore gold market is quite small compared to other. So I think MAS will also be developing that.
MAS Deputy Chairman Chee Hong Tat adds that the goal is to create an ecosystem that enables gold trading activities based out of Singapore and create new opportunities.
If you look at the demand for gold trading in Asia, I think because the world is also becoming more uncertain, more turbulent, whether is it central banks or whether is it large corporations, investors, they do see gold as an asset that can help them in this more uncertain environment.
To support these measures, DBS is expanding gold offerings across wealth and institutional clients. They are also looking at using new technology for gold-related capital market products. All this could help investors build exposure and gain better market access.
More, I'm joined by Shao Kai Fan. He's head of Asia Pacific ex-China and global head of central banks from the World Gold Council. Well, thanks for joining us, CNA, Mr. Fan. How does Singapore plan to become, to achieve its goal of becoming a competitive gold trading and storage hub?
Well, I think you heard from the segment just now some of the key plans that the MAS and the working group on this project have already laid out. Some of them involve already building on what's a very strong foundation in Singapore. Singapore already has, of course, rule of law, political stability, excellent and deep financial markets, good financial regulation. But specifically for gold, Singapore already has excellent vaulting facilities and an LBMA compliant refinery as well. So building on that framework will allow Singapore to expand its offerings for gold into the region and hopefully for global markets as well.
Oh, there are existing big centres. We mentioned in that report by my colleague, London, Zurich, Shanghai, New York. These already exist. If Singapore wants to offer something else, is its advantage only because it's within this region or because it might offer something in this market that at this point does not actually exist?
So I think there are a number of different points to unpack there. First of all, I think Singapore taking on a leadership role in the global market doesn't mean that it's eating into the slices of the other centers that you mentioned. The overall pie of the gold market has grown significantly in the last 20, 30 years or so. Another thing that is important to note is that major centers of demand for gold are in China, India, and Southeast Asia, but also major centers of supply for gold are also very close to Singapore as well, including Australia, Indonesia, the Philippines. It makes sense that there should be a trading hub located near both where gold is supplied, but also where gold is demanded as well. And that's currently missing in the lineup of cities. But I think every city can have its own place in terms of trading gold. Certainly, London and Zurich are both in Europe, but they both fulfill different functions in the gold market. Similarly, I think Singapore can carve out a niche to serve Southeast Asia, of course, but also to bring in a lot of new innovation, financial and technological innovation, that currently some of the other markets lack to allow the gold market to grow even faster.
Oh, the obvious advantages you mentioned, as well as also in that report, Singapore's stability, political stability, its neutrality, and its position as a logistics hub. Even so, if you develop this market, there will be new demands made on Singapore. In terms of regulations or governance, what might we be looking at, I suppose, beefing up to meet this potential large market?
I think that the first and foremost is probably building liquidity and attracting gold liquidity to Singapore, meaning not just attracting more physical gold to be traded in Singapore, but also more market participants as well, whether they be bullion banks or investors. I think that's probably the most important thing. Underlying that, of course, we probably need more clarity on certain regulatory frameworks related to gold. But I think Singapore already has a lot of the ingredients for success. Gold trading is not new to Singapore. There's already quite a bit of gold trading in Singapore already. It's really expanding on this excellent foundation that Singapore has already built to become the next level of a gold trading center.
When we talk about vaulting services, and I had to look this up, so vaulting is essentially keeping in a secure place. Vaulting services for foreign central banks and sovereign entities, is that for you distinct from the other functions of this market?
It's an integral part of the market, but it is distinct in some ways. So central banks are very large holders of gold. And of course, they've been buying quite a bit of gold now for the past 15, 16 years or so. They typically prefer to keep their gold with another official institution. So the Bank of England, which is the UK central bank, or the New York Fed in the United States. Those are two very common and popular storage locations for foreign central banks to store their gold. Of course, some central banks like to keep the gold with themselves at home. And I think, it is different because typically they would like to see an official institution provide these services. But of course, they also represent potential liquidity for the gold market as well. And if Singapore can successfully attract foreign central bank gold into Singapore, it could really boost the liquidity for gold trading in this market.
Well, thanks so much for joining us this evening, Mr. Shao Kai Fan from the World Gold Council.